Now let's see. Okay, we're live, and let me just check with Twitter and make sure we are live. 1 second. Yeah, we're live. Perfect. I see it on Twitter. Okay, guys, thanks. I got a special guest today, Bob Burnett, and sort of a guest, Lawrence Leopard, Larry. And so this is kind of the boomer trio of crypto. We're going to talk a lot about, there's a lot of stuff to cover, but I want to talk about something that I'm not so familiar with, which is mining, sort of the economics of mining stocks. Bob is obviously an expert at that. I want to talk about Bitcoin transactions and sort of something that I heard Bob talk about, which is really unreported in the industry, which is kind of like, what's the sort of the cap on Bitcoin transactions kind of at this block size? It just kind of blew my mind when I heard it. Bob's also got some really interesting, I think very, very unusual, but a very eye-opening predictions on sort of vectors for attacks, right? For like a DDoS attack, if you will, a kind of, and sort of the difficulty adjustment is kind of the weak link. And I was just like, wow, that was just like, and you can go over that. I want to talk a little bit about sort of the consumerization of Bitcoin beyond sort of the financialization of Bitcoin, because Bob's an expert at consumer products, right? So, Bob was, 13 years at Gateway, and a lot of people don't know what Gateway is, right? A lot of people watching this will be like, what's Gateway? Well, if you're alive in the 1990s, you really kind of had a choice between, dude, you're getting a Dell or getting the cow box from Gateway. Those were your choices. I personally got both, but I had a lot of cow boxes, and
Well, thank you in hindsight, Fred.
Yeah. So they were good machines. They were really ugly machines, but they did the job and they were great value, and they were workhorses, right? So there was a certain era here, and one thing that really always interests me is how do we get Bitcoin so. Can we actually get Bitcoin so actually people are using Bitcoin, like in America, right? And I definitely sort of lost hope there a little bit in sort of 2018, 2019. I was sort of like, wow, this is not happening anywhere fast as I thought it was. Anyway, so we're gonna talk about that. I just want to talk a little bit about hyper Bitcoinization and kind of like where we end up, like maybe 10 years or 20 years from now, with kind of like where are we all going with this Bitcoin thing. So thanks, Bob. I'm going to put you on the main stage here. And so thanks a lot. Why don't you tell everybody who you are and how you got involved in mining?
Okay. Well, short version story, as you said, I spent most of my career in the personal computer industry way back into the mid 80s. I was on the design team, very junior member, because I was just out of school, of what I would consider to be the world's first laptop when I was at Zenith. But I then did a startup designing a new breed of what we call the sub-notebook computer. That company was purchased by Gateway about a year before Gateway IPO'd. So I went to Gateway, was part of that management team that took them public. Eventually became the CTO there, so I led all the product development. And by the late 90s, to your point, Fred, people may not realize how big we were. We had about 25,000 employees. We were doing 10 billion a year in revenue.
Wow.
Those are all in like late 90s, especially the revenue numbers are late 90s. We're doing about $1 billion in profit. I think our
$1 billion in profit. Wow.
Yeah, $1 billion in profit, and wow. I think our market cap reached mid to high 20 billions at one point.
Mm-hmm.
And eventually, by that time period, we opened a whole chain of stores that were really the precursors to the Apple Store. We had the same things before them, hundreds of stores all across America with something equivalent to the Genius Bar and training centers and all that. I left that industry in the mid-2000s, did a technology incubator, and then one day in 2017, I got a phone call, and it was from a guy who was a former Gateway person who wanted me to design some Ethereum mining servers for him. He couldn't get a professionally designed Ethereum mining server. So, and he also couldn't get the NVIDIA chips. And a little sidelight of
Just
history.
one question, Bob. Either you or Larry or me.
Yeah, I've got background noise. I'm going to try and figure out how to mute this thing. Hang on a second.
Okay, I can probably, let me.
Okay, can I, does it give me edit name video settings? Oh, hang on.
Okay, yeah, you're muted now. Larry, you're muted. You're good. Okay.
Yeah. Okay.
Okay. Good.
So
good. Perfect.
So I got this phone call, and this guy needed these servers. He needed 800 of them, which ended up being like a $6 million order, and they couldn't get the chips either. And the company we now know as Barefoot Mining, which I am now the founder of and the CEO of, came out of that particular phone call. And at the time, I looked at it as a computer guy because that's really what I was. You know, this guy wanted me to build these servers, which to me was just, you know, a box with a bunch of graphics processors in it. That's what it was in my world, my view of the world at that point. But I started looking harder at Ethereum over the course of the next several months to year.
So sorry, what year was this?
2017.
2017. Okay.
Yeah.
Right when the peak, that was the movement. I mean, Ethereum was, outperforming Bitcoin by a big margin in 2017.
Yeah, and it was, obviously it was very exciting. The product that we brought to market was very successful. We sold a lot of them. I guess the part I missed was that we fulfilled this order for this guy, which was we just shipped them to his data center. But then we started selling that design to other people. Most of the people that we were selling it to said, well, we'll buy one, but only if you'll host it for me. So we had to get into that business. Ironically, but interestingly, we ended up, as our first site, we rented the old Gateway data center, which we're still in today, by the way. We still operate part of our stuff out of the old Gateway data center in North Sioux City, South Dakota. And then we saw these were making a lot of money, so we started self-mining. So, but then when I had a chance to breathe, I started looking at Ethereum in more detail. And first from a technological standpoint, and also, while I'm a technical guy, that's my background. I have always studied economics. I've been very interested in Austrian economics. And so when I started looking at Ethereum, what I saw was something that was overly complex, prone to centralization. They had already announced the proof of stake initiative. I started looking in detail at what that was. I then saw in more detail what proof of work was. So I kind of backed into Bitcoin by first becoming technically concerned about where Ethereum was going, and then looking at things like its monetary policy. And getting even more concerned, and then finding Bitcoin.
Are we still in 2017 now, or have we moved
2017 to 2018? Yeah.
Okay. Yeah.
Yeah. And so we've pivoted basically since 2018, 2019 into Bitcoin completely.
Okay. Right. So, okay. So that was, so also the other thing that was interesting, I think, from a consumer point of view with Ethereum at that time was CryptoKitties. Right, had completely clogged. It had completely clogged the Ethereum network. Right.
Yep.
And I remember also Bitcoin fees were just skyrocketing too, and we also had the block size wars exactly at that kind of period. Right.
Yep. Yeah. We didn't know, was Bitcoin Cash, what we know is Bitcoin Cash going to emerge. There was Bitcoin Gold. There were all those things, and I was like everybody else in that time period, somewhat overwhelmed by all of that. I was reaping the benefit. Like the CryptoKitties was very interesting because we just saw overnight a massive increase in our revenue streams as a result of it.
I think one of the things, the lessons, I was just talking with a friend yesterday, and we were talking about sort of the unexpected things about Bitcoin. And I sort of remember, there's sort of the consensus at that time was, these block size wars were going to kill Bitcoin. It was terrible. And then, of course, it was like, for anybody who held Bitcoin at that point, it's like, wow, I got a 2-for-1. I got my Bitcoin Cash, and I get my Bitcoin. Wow,
Right.
bring them on, man. Bring on the forks, you know?
Yeah.
So it was,
Yeah.
Bitcoin has a way of kind of confounding you. You sort of think you understand it, and you know, and then the reality ends up in a completely different way, you know. So
absolutely. And that's why, by the way, I think, and not to jump too far ahead, like we have to be extremely careful as an ecosystem when we look at things like simple things, maybe from the outside perspective, like adding an opcode.
okay, yeah.
And which is basically a new command in the Bitcoin protocol, that it can have second and third order effects that are
Well, we saw with
wildly
Taproot,
unexpected.
right? Taproot, nobody
Yeah.
expected Taproot to bring in ordinals, right? That did,
Yeah, and yeah, we
I mean,
probably
maybe
don't
you
want to
did,
go down
but
that rabbit hole too
I
deep,
certainly.
but, you know, but that is the very point of it, right? And
Right. Yeah.
that I think when you look at the way Silicon Valley types look at Bitcoin, they look at it as this thing that just it doesn't mature fast enough, it's not growing fast enough, and they fail to miss that no, that's actually its attribute. That
Well, okay. So I want to, on that note, I want to share this graph. Okay. Sorry. Let me share this transaction graph, because I do sort of sympathize with that a little bit. So if you look at this graph, let's look at this graph. These are Bitcoin transactions per day, right?
Mm-hmm.
And, you know, I think a lot of people sort of from the VC or other world, right? They're looking at this and they're like, okay, it's sort of hard to say, but like if I go 2017, we're running about 400,000 transactions a day, right?
Right.
Well, then we started going at 400, then we sort of dropped down, right?
Yeah.
Then we're kind of plateauing at this lower level, right, of 200,000 transactions a day. Then we have kind of a bunch of ordinal stuff here, right? But if you sort of take out the the ordinals, we're still at 400,000 transactions a day, right? So if you look at kind of like, if you looked at this, like if I'm pitching Bitcoin to a VC, the guy's like, guys, you're at the same number of transactions you were at 5 years ago, or sorry, not even 6 years ago, right? I mean, talk to me. Where's the business in this, right? So I think, and I certainly definitely got a little discouraged. I didn't sell any of my Bitcoin, and I really bought it and got encouraged in 2019. But in 2018, it just felt like this Bitcoinization, like Bitcoin taking over the world was not happening, right? It just didn't. It felt like it wasn't happening. I'm curious if you think it's still happening. Like, do you sort of see a world where Bitcoin transactions, whether it's either actually on-chain Bitcoin transactions or through Lightning or through some layer 2 or something, do you think Bitcoin is going to be used as a payment mechanism in America in the next 5 years? That's my question to you.
I think it will be, there's actually two answers to it. So the first one is payments on the base layer. Yeah. I would say yes, but they're specialized transactions. I'm going to buy your car, Fred. Like
so that higher transactions, bigger transactions,
higher transactions. Where we want the security and the finality that only comes with Bitcoin, right? So if you're selling I don't know, you've got a BMW and we decide on a price of 1 Bitcoin, right? Well, like even cashier's checks, right, don't have the security and transaction finality that Bitcoin can provide. So before you give me the keys and the title, you can have that certainty. So I think those sort of things, excuse me, will happen there. I'm very optimistic about Lightning and what it can do at layer 2. It still has work to do, but I'm exposed to a lot of what's going on there. There's a massive amount of development, some really bright people doing some really exciting things, and so I am optimistic. I'm not saying everybody every day is going to use it, but I think you'll have a fairly rapid adoption curve starting on the Lightning side for smaller things. It might be, hey, Fred, we bet $25 on a ball game last night. I lost. Here's your $25 worth of Bitcoin on Lightning.
Right.
I think those sort of things will become very, very common. One interesting thing I want you to point out, though, you had that chart up with transactions per day, right? Well,
I'll put it up back again.
Yeah. So when you look at this, I think it is the right way for most people to look at the network. However, on a technical basis, the real way to look at it is in weight units. So how much of the block space is actually being used. So each block, and there are about 53,000 blocks processed per year. So the network runs about 9 minutes and 49 seconds per block, by the way, on average.
Right.
So runs slightly ahead because as hash rate is growing, right, the difficulty adjustment can't keep up. So we're always lagging. Interesting little tidbit is the median block time. And I know you're a mathematician, Fred. The median block time is like 6 minutes and 40 seconds. So, so just a little interesting side bit. But I just had some analysis done on the entire 2023 block space, every block. And the median block weight was 3.999 last year. Median block weight, meaning completely full. And it was like 3.889 was the average block weight. But remember, there was like 150 empty blocks in the year, which is just kind of a side effect of the way the network works. So you take those out and you get almost the same as the median. The point being that whether ordinals were there or not there, the block space was full last year. Right. So
one of the things you mentioned in a previous podcast, what I think it's worthwhile pointing out, right, which is that we're dealing in a very sort of non-linear kind of system, right? That if you are at, let's say you're at 80% capacity, right, in one of these systems, and suddenly you get an influx of demand, and it could be from ordinals or it could be from UTXO consolidation, or it could be anything, right? If you get a 10% increase in demand, it does not increase the fees by 10%. Right?
Correct.
So we're talking a very nonlinear. It's very unintuitive, right? Because I think we're all very used to these kind of intuitive things, but we saw last year, in particular, these fees just skyrocket, right? And and then come down equally fast, right? So. And I've done a lot of looking at the block space too, and I've also noticed, that most of these blocks, even though the number of ordinal transactions is a pretty large component of the number of transactions, right? So if you look in 2023, there were 50 million ordinal transactions, right?
Yep.
So that's about 40% of all transactions, or 40 or 50% of all transactions, right? Were ordinals, but it is not the case that that if you look at these bigger blocks, like this block, I guarantee you it's not an ordinal block. I guarantee you it's a UTXO consolidation block. So I think what you're saying is there's a lot of reasons other than ordinals for things to get congested, and we're going to get on that in a little bit, right? Because I do want to talk about this sort of congestion and whether it's Lightning or a layer 2. I'm personally not as bullish on Lightning, but I'm very, very familiar with it, and but I see some sort of consumer adoption flaws with it. But I just want to take a little segue right now and go back to mining, because that's kind of that's kind of your specialty, and I want to go to so here we have. I'm going to so most people are going to look at this and they're going to start with the top couple miners, right? So if I look at this as an investor and I'm like Marathon Digital Holdings, right? So Marathon and Riot are kind of, I think, the two largest miners. Is that correct? Yeah.
Well,
so,
Core is.
Sorry?
Core's still pretty big.
Core, right. Core Scientific, right? So, but if I look at these miners, right? So Marathon here, it definitely has nowhere near come back to its kind of peak price, right? And I go to Riot, and same deal, right? So Riot was at $75, now it's at 12, right? So had you had the misfortune of buying Riot, in early 2021, you're way underwater, right, relative to where it is today. Now, if you look at, like me, I kind of like to poke around at the financials of these things. Let's take a look at Marathon's kind of, P&L statement, income statement, right?
Mm-hmm.
Well, these guys lost $8 million in 2020, 57 in 21, 116 in 2022, 110 in 2023, and last trailing 12 months, another 110, right? So, these companies, they're not printing money, right? It's not the case that these companies are just printing money. And this is, we're at all-time highs, in terms of thing. Now, if I look at Riot, I look at operating income, same deal, right? So these companies seem to be, in my opinion, just looking at it, and I'm not an expert, right? But they definitely feel like they're a little bit overinvested. There's just too much money coming in to these companies. And here's the last chart I want to show, which is, this is the total hash rate, right? So, we are now, if you told me, and I did a little bit of mining myself on Compass just to test it out and understand what's going on, right? And I remember, here I got some stuff, and it was like, I thought it was a little less, but it says 90 exahash, right? Kind of here in 2020. If you told me we were going to be at 500 today, I would have been like, "Are you kidding me? What?"
Yeah.
But yet we are. So people are just deploying. It's more technology, but it's more money coming into this big mining space. So with that, my question to you is really, are people who's putting money into mining as opposed to just putting money into Bitcoin? Who does that, and why are people doing it at such scale right now?
Well, I think we have to separate putting money into mining between those public mining organizations and, we'll say, the private ones, more like myself, that right. I will say I'm not public, right? I made money every single one of those years. So
okay, great.
Now the magnitude of my profit pales in comparison to the magnitude of their loss. I'm not that big. But I think the issue is that, one, we are making money. By the way, we got Larry on today. Larry, through the Bitcoin Opportunity Fund, and we have a joint venture. We've done a project together, and we are making money. We have been making money for almost a year now together on a project. So we've got a lot of high net worth individuals. We've got funds. We've got family offices. We've got people like that are putting money into these operations. But we have almost no overhead. I think when you look at those, I'll tell you a couple comments about the public miners. And I want to start by saying I'm not a fan. I'm not going to say I'm not a fan of Riot or Marathon. I'm going to say I'm not a fan of the whole group. Okay. And the reason is that I think they have they have a natural tendency where the cycles of Bitcoin and the cycles that their shareholders kind of push on them are offset, and they're wrong. They're out of sync. Okay. And part of the reason is, and I don't want to put too much in one place, but let's just say, Fred, let's say you and I decide we want to somehow put a group together. We're going to go fund a new 200 megawatt operation. Okay. So we're going to do the capital raising. We're going to go find the land. We're going to get the permits. We're going to order the transformers. We're going to need tens of thousands of servers. So we're going to pre-order them. It's going to take us, let's say, 15 months to put that project together. Well, when we bring that thing out,
Mm-hmm.
We're doing it now at seemingly the start of the bull cycle, right? Everybody's happy.
Right.
The capital's there, right?
Right.
We don't know what we're coming up into.
Right.
And what tends to happen with the big miners is last year, by the way, was the year for major expansion. Last year was the year. So companies should have been massively investing last year. The price of the equipment was low. The energy was still reasonably available. But they weren't, right? They were all losing money. The price of Bitcoin was down. I think their shareholders and their creditors would have said, hey, you're nuts to be expanding in this environment, right?
Okay.
So what's maybe going to happen, we'll see if they get smarter this time, is we're going to hit the bull run. Bitcoin's going to be at 100,000, and they're going to go raise a whole bunch of money and expand again to catch the backside of the bull or the start of the bear, or even be in the middle of the bear. And they're going to have overpriced equipment, and they're going to be off on the times. So that's what happened, right? You know, that when you look at, I mentioned Core earlier, and I have a particular axe to grind with them, frankly, because they, if you look at what happened to them, they went public in early 2022, raised $200 million. 11 months later, they were bankrupt, having blown through all that money, blown through $1 billion in debt. They had taken that money, bought massive amounts of mining equipment, in my mind, almost in a predatory manner, to just kind of keep, because I think they get in this hash rate race, right? I think the big guys are in this hash rate race. That's hard to say. You know, I don't care. Do I care if I'm 1/4%, 1%, 1/10% of the Bitcoin network? Not really. I want to make money, right? I'm not trying to race it. And it's very reminiscent, by the way, of early personal computer days, where
that's what I was about to say. It does feel to me eerily kind of there's a eerie parallel with kind of like Compaq coming in and just smashing prices, you know, and stuff like that. You know what I mean? And you see that German CEO of Compaq on TV, and he'd be like, "Yeah, I'm going to crush the competition." Remember that guy?
Yeah.
You know, the guy was like the Terminator. I forget the guy's name, but
Helmut or something like that, I think was his name.
Yeah, no, I remember him talking about, somebody was asking, what's your favorite place to be? Desktops, laptops, or, you know, servers? And he's like, I'm going to crush the competition in all three categories. You're in desktops, I'm going to crush you. Laptops, crush you. Yeah. And it just felt like that, kind of like the, you know, the war to the death, you know, it was the battle royale. And
and it was not, see, to me, you know, do I want to make money? Of course I want to make money. Like that's obvious, but I still am here for Bitcoin first and foremost.
Right.
You know? And so and my entire team, and even, you know, the people that invest with me, we always have the conversation like, hey, you know, we're here to build this network, and under the belief that if we do the right things, we make the right decisions, then, and we grow Bitcoin, it comes back to us.
Right.
I was a C-suite executive in a Fortune 200 company. So I get what maybe is going on inside the C-suites of the public mining companies. I don't want to be there because I can't make good decisions when I have to worry about what I'm going to tell the street at the next earnings announcement. Like,
well, let's talk about that a little bit, because that's sort of changed also, right? Because, you know, up 3 months, you had Wall Street had a choice of, they could invest in Grayscale, right? They could invest in MicroStrategies, right, which is the proxy for Bitcoin.
Yep.
Or they could invest in these mining stocks, right? Those were kind of your choice. That was what's on the menu at Burger King, right? And now we have this new, we have this new item on the menu, which is ETFs, right? So now, if you look at these new ETFs, this particular item has been extremely successful. There's a
Yes.
lot of demand for the ETF Whopper, on Wall
Right.
Street. And I just wanted to point this thing out. I was showing this to Larry. This is on ByteTree. They monitor all fund inflows of like all, not only spot ETFs, but also futures ETFs and other stuff, including international, right? And this is really amazing because if you look we were at, in terms of Bitcoin numbers, right? We're at about 80,000 Bitcoin a month that was coming into the world in 2020, right? End of 2020. And now we are already at 130 Bitcoin, 130,000 Bitcoin a month that's coming in so we're seeing this wall of money coming in on Wall Street that is just unprecedented. So I'm wondering how do you start, how does that impact the mining business, or how does that impact, and just sort of your thoughts on it. Did you expect this kind of money coming into the system in sort of December of last year?
I'm like you have a mathematical background. I guess I view everything in terms of probabilities. So I put it in the probability set, but I probably had it in the 10 to 20% probability that we were like this fast.
Right.
Much, by the way, I don't want to reverse too much, but like you talked about hash rate, I have a model that I've developed over the years, and my model was extremely accurate for all of 2023. I did really well. It completely has failed the last 60 to 90 days.
Really?
I didn't see, almost nothing in my model saw the continued hash rate acceleration in front of the halving. Like I didn't see that. But anyway, back on your main point. I think others have said it. It's not a unique thought, but I think these mining companies, when you saw like the riot peak, that was the proxy for Bitcoin at that time.
Right.
Since then, as you said, MicroStrategy emerged. Now the ETFs have emerged. Now, I will say this. It is possible for a properly run mining organization to outperform Bitcoin. That is still possible.
But by how much? By a factor of 2?
That's possible. Again, we're going to go into the probabilities. That's in the possibility set. And a lot of that comes down to what happens with fees. And so, you have to do your own analysis. I mean, I have my own about where it's going. I think they are.
So let's just talk about fees as a percentage of total block rewards after this happening, right? So where do you see kind of fees? What percentage would you say fees are going to be out of total block rewards? And what percentage are fees going to be kind of 2, 3, 4 years out? Is it going to be above 50%? Do you think, or going to be 10%? Where is it going to be? I mean, is it?
Yeah. If you ask me to guess,
if just one guess, one number,
before
say 2027,
as we go to the next halving, so 4 years
right,
from
2028.
now, I predict parity.
Parity
between
right. So I agree with you. So like I'm, just for the record, I'm super, like, if I could buy one thing, I would buy the price of block space. I just feel like block space is going to be at such a premium, It just feels to me, it's just, absolutely natural to me that you just look at these numbers and there's just no way we're going to have just massive amount of block space. So I think fees are going up. Like, just there's no doubt in my mind. And then when you said that, I just resonated. Like, I was like, wow.
Yeah. Which, by the way, means, if you agree with me, it means that as we go into the next epoch, not this one, the one after, now we're at 2/3 of miner revenue,
right,
as fees. Right. So I want to go further on what you've said, though, because I'm actually working on something. Because I've seen this really pretty clearly for the last year, and you said I've tried to educate as best I can with the reach I have that, hey, this block space is going to be really frickin' scarce. We're at the end of an era. I call it the end of the introductory phase of Bitcoin, and where people, so the subsidy for those of you maybe who aren't as familiar. So
yeah, let's go to break it down to the basics, because you can't assume anything. Let's just,
okay.
So be slow and explain it to everybody.
All right. So
how do miners make money? What are the components?
Okay, so as a miner, let's just keep the math simple. If you had 1% of the world's hash rate, then your hash rate would be contributing, would ultimately receive 1% of the block reward. Okay, and so a block gets processed approximately every 10 minutes, and the fees to the miners are comprised of whatever the subsidy is at the time. It's presently 6 1/4. It's going to 3 1/8, plus fees. The fees are, I like to think of them as tips. So I mentioned buying Fred's car earlier. If I want that transaction to happen really quickly, I put a big tip in and move to the front of the line. If I don't
more
care,
like a bribe.
Yeah. Okay, fine. I accept that. And so now miners, historically, we've been in the Bitcoin world for 15 years.
Right.
Fees have typically been, as measured in Bitcoin, right? Well, I guess it's all measured in Bitcoin,
right.
1-3%. There have been blips when it goes up higher, but for the most part, it's been very, very low. So when Fred and I were talking earlier about saying, hey, 4 years from now, this could be 50-50, and then transitioning to 67-33 on the backside of that, that's pretty dramatic. Now,
especially relative to, let's say now, not even to add in 2023, but where were the fees as a percentage of total money in say 2022? It was like 10%, 15%.
No, it was, so I'm trying to think of it in percent terms. What I can tell you this, when I studied that time period,
yeah,
interestingly, the average block fees was 0.335. I remember that number.
Okay.
So it was, what was that, as 5%, right?
Yeah.
Or take a little bit.
Yeah.
Now there's an interesting observation. This is one that
so not very much. So this is a major change that we're talking about, right?
Yeah.
We're talking about miners now really relying on fee income more so than on block rewards, which kind of means the impact of the halving is less, right?
That's one effect. But the second effect is that, as measured in Bitcoin, we are going from essentially having a fixed income stream where, because I could say, hey, obviously the fiat price is bouncing around, but I know what the Bitcoin production is.
Right.
But now, if we go to a world where it's 50-50, I've got and even 2/3, 1/3. Now, I don't really know what my income stream looks like. So that gets a little scarier, right? Because so it's an interesting thing I kind of realized over the last several months, and that was one. If you look at from this point backwards, Bitcoin miners, which are really, by the way, Bitcoin hashers, we'll get to that in a second, but the Bitcoin hashers, the product of their efforts was Bitcoin.
Right.
Going forward, the product of their efforts moves more and more toward block space.
Yeah.
So in other words, we're kind of switching from producing one commodity to another, because I'm viewing block space itself as a commodity.
Right.
Now, on the other side of this, though, and this is where I'm working on something that I can announce somewhat in detail today. And that's that I've been looking at this problem saying, hey, on one side we have miners, hashers being in a position where they can't predict future revenue streams nearly as well as they can now. Right? On the other side, we have organizations. I'll use Swan as an example, or an exchange. An exchange that, let's say, has to do a couple hundred base layer resolutions a day. or
Right.
transactions a day. To date, that has been a minuscule line item in their P&L statement, right? Their
Right.
operating expense.
Mm-hmm. Yep.
It has the potential to become a very high and highly volatile line item in their P&L statement.
Right.
So what I've said is, well, hey, this is a commodity. This is a
You're
natural.
talking about trading block space, right?
Yes, yeah. And so I've been working for coming up on a year now on a futures marketplace.
Oh, brilliant.
To create derivatives for block space. And the basic
How long?
concept.
How long out? How many contracts out?
Well, we're still working on that, but we'll probably
Okay.
be like maybe 6 months out, something like
Okay.
that. But I mean, we'll see, because here's the thing. If I'm going to use the 1%. Okay. If I have 1% of the world's block space, I can't predict exactly how many blocks I'm going to win in the next day, but I can be damn certain about, let's say, a 2-week period, that a minimum amount over a 2-week period. What I have to do, though, and I don't want to get too technical, but right now what happens is the pools pick the block templates, meaning they pick what transactions go in the blocks. And the Riots and the Marathons and even the Barefoots of the world, we attach to these pools and we hash for them. That's why I said it's actually a misnomer. There essentially are no mining companies. There are only hashing companies.
Right.
However, I'm on the board of directors at Ocean. Through my fund, I've made a big investment in Ocean, and I'm fairly active inside the company, because what we're doing at Ocean is we're moving block template creation back to the miner. Like, so
I see.
Individual miners can now create their block template.
How does this relate to like what Marathon was doing with their API thing? And
well, that's a great question. Can we come back to that in just a second?
Yeah, sure. Yeah, for sure.
They're on the right path, but I still don't like it. But I'll tell you why. But so the idea is, if I control the block template, and I'll use that, if I have 1% of the block templates, then I can know with a high degree of certainty in certain windows how many transactions I can essentially process. So I could go to you, Fred, and you could say, hey, I know I want to do 100 transactions in June. Maybe it's a massive UTXO consolidation project, or whatever. And you
could be an ordinal. Could be I want to mine some Fred cats, right?
Yeah, maybe. I hope not, but
why not?
But regardless, you could come in and you could say, hey, Bob, I would probably offer it, right? I would go out and offer 100 June transactions at a certain price per VByte.
Okay.
And you could go in and buy it.
Okay.
And lock that price in. Now, I've locked in a certain percentage of my revenue at a known price that I'm comfortable with, and you've locked in your cost structure. And now you can also trade it too, though. So you have a marketplace in which you can trade it. And I think that's a natural extension of, every commodity, if it's going to be an important commodity and mature, is going to have a derivatives marketplace. That's more your work.
Right. And so now I want calls on that as well, right?
Yes, exactly.
I want to buy calls and puts on that structure. Yeah.
Yeah.
Or sell them.
Now you asked about Marathon and Slipstream. So it's the thing with this marketplace that we're going to develop. And by the way, we will do all of this over Lightning. By the way, all of these contracts will be executed using Lightning. So all the forwards and all that will be done on Lightning. But
is this kind of using any of David Marcus's stuff, or
no? We're working with a company, ironically, called Block Spaces out of Tampa.
Okay, cool.
So, So what's happening today is there are kind of one-offs, and that's what Marathon Slipstream is about. It's kind of more like if you have a special transaction, whether it's a large transaction, large meaning it could be in value or it could be in size.
Okay.
It could be an unusual data type. Then what Marathon is saying is, hey, come to us, because they are the only miner that actually does have a pool. They don't do 100% through their own pool, but they are the only ones that can probably claim the moniker miner today. I would give them
Right.
credit for that.
The others are merely hashers.
That's all they are. Yep.
Right. Okay.
And so you can go to them and you can say, hey, I'll buy this. Now the problem is, and this has happened at the pool level as well.
Mhm.
So people have gone to, for instance, Luxor and said, hey, will you include this in a block? Well, what happens is that now the market, if those sort of things become the pervasive way for this sort of thing to happen, it makes the marketplace impossible to read, because you don't know where fees really are, right? What are people really paying for this space? What will it really take to get your transaction included? Number one. And number two, it actually screws up all the payout methods used by all the miners except for Ocean, because I don't want to get too detailed, but they use a method called FPPS. It stands for full pay per share. Right. And the only way they can calculate the fee structure they should be giving to their hashers is by knowing the transaction fees for everything that occurred. It's usually like in the last 100 blocks, and they're kind of giving you a blended average. So if that's not there, and by the way, those are probably the most expensive ones, right? I mean, people are paying a lot for those, and yet they're not visible to the rest of the market. So,
okay. Well, thanks, Bob. I want to cover a couple more things that I just, as we have 10 more minutes, I wanted you to talk a little bit about this kind of, you mentioned on another show, sort of an Australian podcast I saw you on, and you were talking about kind of the difficulty adjustment and how that could end up becoming like, a difficulty gets adjusted for a year and there's no Bitcoin transaction. Can you go over that exact kind of scenario, which I don't know, that's really interesting to me. I thought that was, I'd like to hear, how does that scenario happen and how vulnerable is Bitcoin, and how does the not concentrating everything in like 4 or 5 big miners help with that?
Okay. Yeah. So the genesis of me thinking about this was when the China mining ban happened. The Bitcoin network did great, right? We bounced back quickly and we were very, very resilient. So I started to think about whether or not we should really be so confident, because I think as a community we were all like patting ourselves on the back. I thought, well, how much bigger would it have had to be for there to be a problem, and what sort of circumstances might make it really bad? And so again, for those who don't follow this closely, the way that Bitcoin tries to keep on roughly a 10-minute heartbeat for block transactions is every 2016 blocks, it looks back at the amount of time that it took to do the previous 2016 blocks, and it changes the difficulty target for the coming set of 2016 blocks. So the theory is that, hey, we're gonna constantly kind of come back to this mean of about 10 minutes. And it's worked, by the way, very well over the last 15 years. However, if we envision a scenario some point in the future, it's not tomorrow, but it's some point out in time, where we only have the marathons and the riots and the nation states, we've got 99% of the hash rate sitting in a very small number of easily identifiable sites, we have a dangerous situation. So if the major nation states of the world decided that, hey, we want to impair this Bitcoin thing, And I'm not talking about a 51%. We want to completely obliterate it, and shake the world's confidence in it such that it'll never be usable again. Then I think that what they would do is take advantage of that opportunity. So what they would do is they would wait until the moment when a difficulty adjustment was going to happen. They come in and they instantly impair, let's say, 99% of the network. And that may only take, let's say, turning off 4 or 5 or 6 dozen sites. So it's a finite amount that could be
So
impaired.
literally turn off the power.
Turn off the power. Yep. National Guard's out. The troops are out. Turn it off.
Okay.
It all shuts down. So now the network is expecting X amount of hash rate to go for the next block, but there's only 1% of that. So mathematically, what changes is instead of 10 minutes to process that block, it goes to something just short of 17 hours. Now, if it was only one block, wouldn't be the end of the world, right? The problem is we're now 2016 blocks away from that adjustment taking place. So if you do the math on that, that's approaching 4 years. So it would take 4 years to get to the difficulty adjustment. Now, in the meantime, you might say, well, wouldn't other hash rate come online? Well, I think if we're in a world where 99% of the hash rate was already in the hands of the big guys, all the plebs, what I call the rabbits and the horses, plebs being the individual miners with an S19 in their garage, and the horses being companies like mine that produce small to mid-sized commercial sites. We've all been gone, right? We're obsolete. There's nothing for us to turn back on.
Right.
So, and of course, if they can impair those sites, they're not going to let the production of new equipment come in either, right? So, it would be a way of attacking Bitcoin by just impairing it, right? As you call it, it's a denial of service attack, in a kind of a unique way. So, now that is 100% preventable, interestingly, because if you go back to the genesis of why did I think about this, I've done the math, and as long as we have, well, I'll say even in the extreme case, as long as we have 15% of the hash rate still with the plebs and the horses, but ideally more like 70%, then the network recovers very similar to the way that it did with the China ban, right? It corrects itself. Yeah, we've got some expended block times for a month or two, but everything's okay. But so it's and
where are we on that percentage right now? Where is that percentage right now, if you had to guess? Or if you had to
I think we're in the
estimate
50% range, maybe mid 40s to 50% range.
Okay, so we're in okay shape right now.
Yeah,
we just can't have the big five or whatever just completely eat up the other ones for lunch.
Yeah, and you know what happens is, like, I probably, some people probably won't like me saying this, but when I read company X is opening a new 500 megawatt site, let's say, or capitalizing it, for the reasons I talked about before, I kind of cringe because I go, I wonder if that's really going to work out the way that they think it's going to work out, because I think it's a high risk proposition. But more importantly, I go, well, shit, now the horses and the rabbits have to come up with, let's say 100 to 150 megawatts of additional horsepower to keep up, or we're going to start falling further and further behind. And, funny enough, I think that another way to look at the public companies is they're basically using the Cantillon effect to create this, right? So it's kind of funny in a way that it's using this flaw in the fiat system almost infects the Bitcoin system. That's the only way it really happens.
Well, and we're sort of seeing a reverse thing of that with the ETFs, right? The Bitcoin's infiltrating the financial system now via these ETFs. And
that's true.
Just to kind of, I want to circle back on that kind of before and talk a little bit about your view on kind of Bitcoin price itself and where we are. So let's take a look at the chart here. Okay, so here we are at 68,000. You've got one number, one guess. Where do we end the cycle? Where are we 4 years from now? If you had, and nobody's holding you to it, but where do you kind of think, or even give me a range? Where do you think Bitcoin is 4 years from now? Give me a range.
150 is my like guarantee, like 100% confidence number.
Okay.
My most probable number, 250 to 275.
Okay.
And possible number,
500,000.
Yeah.
Okay. So you guys have heard it here. Midpoint 250, right? So midpoint so 4x from here.
Yeah.
Now
50% confidence number. Yeah.
50% confidence. Yeah, I don't see any point really in going on out beyond 4 years. I mean, everybody's like, what happens in 20 years? Like the future is too hard to predict. I mean, we have a really hard time even talking about what. Like I have no idea who's going to become president. In November.
Yeah.
So given that I can't predict who's going to become president, I certainly don't think I can predict beyond a couple of years of Bitcoin. I do agree that it seems really unlikely that Bitcoin does less than 2x over the next 4 years. I do sort of see a scenario where it could potentially go to 1 million. Just on a, just on a pure scarcity. Just things change, and part of the reason I say that is, all of us have kind of either worked on Wall Street or dealt with Wall Street in our careers. And, Wall Street is as greedy as everybody else, or greedier. Right. And they tend to go with winners. And if Bitcoin starts getting much above 100,000, there's just going to be this stampeding effect of these guys. They have to own it, and it's just, it's got to be in everybody's portfolio, and it's got to be more than 1% too, People are going to look at this thing as the next FANG. I've even made a joke that people should call it B FANG, right? Because people are going to be talking about Bitcoin as you're going to see it on every day in CNBC. I think. I don't know about you, but.
Well, absolutely it is. And like, if I watch, let's say Fox Business, like it's very prevalent on Fox Business. Like it's part of the normal ticker there. And, I'll since this is kind of the boomer edition of the show, I'll say this. I
also like to get Larry to weigh in on where do you sort of say, if you have to say the same thing, Larry, just because we have a couple minutes, what do you think, Larry? Maybe unmute yourself.
Price prediction?
Price prediction. A range in 4 years, the end of this year, in 4 years, the end of this cycle, the next cycle.
I'm probably a bit more bullish than Bob.
Okay.
I think that, and I think it goes to, you and I, Fred, were talking about this before we went live. I mean, I think we're kind of at that tipping point. Somebody told me the other day, I don't know if it's accurate information, but that they're close to 1 million wallets being downloaded every day. I'm not sure how they know that or how they track that. And that's like up multiples of what that was a year ago. Wow. And it feels to me like we're getting to the stage where, we're kind of at the 10% point, which, as from the Malcolm Gladwell model of how things get adopted. I mean, the curve, the slope gets steep at the point in time.
Yeah,
the S curve, right. The slope gets very steep. And so I tend to think that we can go to, a couple 100,000 piece of cake in the next, 6 months to a year. And I'm not sure, but what, Samson's not right. And we don't go to 1 million, not to say we wouldn't correct off of that, because I think at that point you'd free up some coins. Some of the early hodlers would sell, but, in particular, the math that is compelling to me is the fact that there's 700 trillion of financial assets, maybe 300 or 700 trillion of fiat assets, including real estate. Throw real estate out, maybe it's 350. Even just take the bond market, it's 100 trillion.
Yeah.
And, we're talking about a total asset class here, Bitcoin, assuming all the coins are there, which they're not because some have been lost, is 1.3 trillion. And as we all know, a lot of those aren't selling at anything close to these prices.
I think the other thing, Larry, to emphasize, right, which is, I think the other thing is everybody is always talking about this deficit that's 34 trillion, right? The debt, right?
Right. Right.
But the mirror of the debt is there 34 trillion of bonds out there, right?
Right.
Somebody holds, right?
Right.
So, it's not just like there's this debt, we're in trouble. There's also all this bonds, there's all this money, right? And there's all this is artificially increased the S&P by probably a 2x, right? Where it would be.
Easily.
You know what I mean?
Yeah.
I think the big, I was telling somebody the other day, it's like, when I was on Wall Street, the normal interest rate was 8%, right? Like that was kind of, if I had to guess, like what a normal interest rate was, I would say 8. And then, sometimes it'd go higher, 9, 10, but like sometimes it'd be low, like 6, but the average was 8, right? And I think, but everybody was already, even in the 80s, we were already worried about deficits. I mean, with the Reagan deficits, we called them.
Right.
Remember
I remember
that?
it.
Reagan deficits?
Yeah, it seems quaint now. It was like $200 billion, $100 billion. So, but let me just continue the thought, Fred, because I think this multiplier thing is important. And what we saw, and we can all argue about what the multiplier will be going forward, but what we saw is it's somewhere between 8 and 20 billion going into these funds, and there's a very clear demarcation point, right? ETFs did not exist; ETFs do exist, and so we can exactly see how much they grew. And then we can also see how much the value of Bitcoin grew during the time frame, during that window. And, depending on what numbers you use, you get to multipliers of kind of 10 to 30 or 40x. So, if there really is a $100 trillion bond market, and, let's just say 10% of it says we need to go and protect ourselves with this Bitcoin stuff, that's $10 trillion. And then if if you use the multiplier effect, there's just no way they're going to be able to buy that much coin without the coin being, just enormously marked up. So, I'm not predicting it because I don't want to, seem like a fool. But and in retrospect, I could be wrong in my model here. But my gut is that we all, I think we all might be incredibly surprised by what happens here with the price.
I agree.
Kind of like shocked. And I think the reason for that is that and this is where TradFi, I think, gets it all wrong. They think, well, I had a TradFi friend who said, I can't buy it now. It's at 60. I should have bought it at 30. I'm like, no, you're not thinking about this right. This is a limited supply good. This is the only commodity in the world that has limited supply, that the price goes up and there's no more of it. And so as a result of that, I think we're going to be stunned by how high the price goes. I really do. I think we're going to be stunned. And
one last question somebody asked in the audience, but I think it's a valid question. It's like, how can ETH keep up with BTC without an ETF? All this money is going into BTC. It's not going into ETH.
Yeah, it's a good question. I don't know. Personally, I don't spend any time thinking about ETH.
Okay. I'm barely spending any time, but Bob, you were an ex-ETH guy. What do you think of it now?
I would say be very, very careful. I think that, some of, I guess I would call the new money is, I think, probably attracted to it. So we may see some of that, maybe almost going into ETH out of jealousy right now, or going, but the real power, like supporting both of your points, that my predictions may have been too modest. Larry and I both are in Naples, Florida right now. I live here year round. Larry's here part of the year. And it's one of the wealthier communities in America, probably in the world. And the penetration of Bitcoin in this community is 0.0001%.
Right. Absolutely.
And it is changing dramatically. So I've lived here full-time for 5 years. I belong to a club, a lot of high net worth people in the club. And I've been preaching for years with basically no takers. The last 60 days, it's changed.
That's what I've noticed too. Same thing. Yeah. All of a sudden, we're getting some real interest.
Yeah.
And it's a different kind of interest than it was in, let's say, even 2017,
Very different. And it's not, I'm going to buy $500 to try it out. It's, I'm going to buy a Bitcoin or 2 Bitcoin or 3 Bitcoin to try it out. Because that's where these folks are in their wealth. And
they also love the idea of getting a whole coin. They just love that.
Yeah.
I've noticed that.
Yeah. And the 54 million millionaires and 21 million coins, and there aren't really 21 million, as we all know. So, Yeah, I think it's really, I mean, to me, I'm beginning to feel really sorry for the people who don't understand this and don't know it, because I think in 10, 15, 20 years, they're going to be the people who bought Bitcoin and those who didn't. And the difference in their, in their economic situation is going to be so stark that there's going to be, anger and disappointment on the part of the people who didn't listen and didn't get it. And it's really,
well, just look at that Dave Portnoy guy, and he's just sitting there crying. And he's like, "What are these guys? What have they done? The only thing they did is bought Bitcoin." I'm about to say, "Yes, Dave, that's exactly right.
Exactly.
That's what that's what they did. They bought Bitcoin, and guess what? They're rich, and you missed
well,
out."
And I think, again, people don't really understand. I used an analogy when I was in Bitcoin Atlantis, which was that, when Microsoft DOS came out, I met Ballmer, and he was telling me how this is going to be the base layer of all computers. It's going to be billions of dollars of value. Everyone's going to use this stuff in order to to compute, so to speak, and everyone's going to have a computer. And I looked at him like he was nuts. I mean, I kind of got it, but not entirely. And of course, what he said was right. It all came true. And I think this is going to be the base layer of money. And I think, things will be denominated in sats in the future. I mean, Gresham's law will kick in and the dollar will disappear, which I know some people in the thread have called me a doomer for saying that. I think it's just simple math, and it's just a sense of how it's going to work out. Look, another good analogy I like to make is, I think that, imagine if you come down to the United States and you told somebody, in 1900, you'd said to somebody, you know what, there's going to be this thing that's going to get invented. It's called the airplane, and you're going to be able to fly from New York to LA in 4 hours. And it's not going to take you 38 hours or 40 hours on a train the way it takes today. And everyone has said, there's no way, that's not possible. That's a dream. That's outside the realm of possibility. And yet the Wright brothers flew. And of course, it took 30 years to get it perfected until we had jet engines go that fast. But, it probably took 25 years until we had propeller planes that could get you across country. And the point is that's kind of what we're talking about here. This is a quote unquote better form of money. It's superior money in every way, shape, and form. And that's what Saylor has really focused in on. And he's just like, guys, I mean, this is an engineering feat. You didn't want to be fighting with swords when gunpowder got invented. You know what I mean? I mean, it was Saifedean's recent comment. I mean, he's been saying it for years, but it got highlighted on Twitter today. That this is a better technology, full stop. And better technologies get adopted. Cell phone comes out, and people like being able to make calls mobily. Everyone has one. Mm-hmm. So I think that's.
And the other thing is, with that, I think it does go to like a 90% kind of adoption, right? Like, it's sort of like, I remember when I had a competitor to Facebook back in the day. Backed by Tim Draper, believe it or not, So wow. I had this competitor, and Facebook was just a college thing. It was still only at Harvard at the time, but nobody saw. Everybody saw I was talking to all these VCs, Sequoia, a bunch of other people, and they were like, "Yeah, we kind of sort of see this thing being an interesting teen phenomena," like right. Nobody saw that it was going to get to. 80% of America is going to be on social media, or 80% of the world. Right. Forget America. 80% of the world is on some form of social media, right?
Yeah, you computerize relationships. I mean, look at with the cell phone. I mean, look at
cell phone's another example, or I would say digital camera, right? Yeah. I had one of the very first digital cameras. What?
Personal computer.
Personal computer is a great example, right?
Yeah.
Remember the deck guy saying there's only a need for 10 of these things or whatever.
Yeah, of them or something. Yeah. Well, that was originally what was said about the mainframe too. When Watson invented the mainframe, there were guys saying there's no need for it. I mean, look, there are always skeptics of new technologies, and
right.
It takes time. I mean, look, we are still in internet terms, we're still at in my view, we're still kind of at 1995 or 1996. I mean, this thing is not perfect.
That might be generous. That might even be.
Yeah, generous. Right. Exactly. I agree with you, Bob. It may be generous. I mean, we've got a lot of work to do. The lightning, and
I don't think we're 95, because here's the thing. I really think if you ask, what do I think the penetration is of people who own a significant amount of their net worth in Bitcoin, and that could be a person who owns $1,000 Bitcoin and has, let's say 10 grand in savings, right? Yeah. I think that percentage is 1% right now. If I had to guess, like, I think 1% of the planet has you know,
a meaningful bet. Yeah, but I would guess that
maybe
I would
1%. I don't know.
I would guess that maybe 5% of the what I would call, the non-third world planet probably
Right.
has some interest in it. Maybe
Some
small.
interest, but I mean, look, with this ETF, we're going to get, this is going to be, like if you ask somebody, you just go around your country club, Bob, and say, okay, how many of you guys own Apple? And people will be like, yeah.
Oh,
Okay,
yeah.
how many of you own Google? Yeah. How many of you own Nvidia? Yeah. You know what I mean?
Yeah.
How many of you own Bitcoin? What?
Yeah,
Well,
right.
it's gonna be, yeah, I own the ETF.
Yeah.
You know that's going to be the case in a couple of years. You just know it.
Absolutely. Right? Well, I said this on Twitter a few weeks ago, but I'm known as Bitcoin Bob here, in a friendly, joking manner, because you get trapped with me. You play golf with me for 4 hours, and it's highly unlikely that I'm not going to talk about Bitcoin, right? So at this point, most of them have played with me and gotten a pitch, and most of them discount it. But I've told them all. I said the problem is you guys are. It's hardest for you to see Bitcoin from anybody in the whole world because you've been so successful in this fiat world. You don't understand the degree to which the system is actually a failure. But like like a lot of people. The accessibility of the ETF and the number go up and all that sort of stuff has definitely got their eye right now. And I've been maybe almost in a subtle way been planting these seeds for a lot of years that maybe there's something there, that there's more to it than just that number go up, the Jamie Dimons of, Larry, you cannot underestimate the importance of Larry Fink being supportive. Like him or not,
huge.
To that community, it is massive.
Oh yeah. No,
you can't, and you also can't underestimate the ETFs. I mean, to be honest with you, I'm shocked that the ETFs came out because, as Saylor says, that really gave a lot of people the green light. I mean, the TradFi line for people I would talk to is, yeah, that's great, and I'd want sound money too, but the government's going to kill it. When the government approved the ETF, that FUD went away. I mean, now I think that FUD might come back because I think when it gets existential for the government, they might come back and try and kill it. But we'll deal with that down the road.
Well, guys, I want to keep it down because I know Bob's got at 12 o'clock and we're already over it. But hey, guys, I really appreciate it. And I also just want to keep it down. I think an hour is a good thing. I really appreciate, hey, both of you guys. It's great. And look forward to talking to you guys at some future event in reality. Maybe see you guys at Bitcoin Nashville if you guys are going to be there.
For sure. We'll see you.
Okay, cool. Sure. Well, I'll see you guys in July in Tennessee. And thanks for both of you guys. I'll talk to you guys later.
Thank you so much.
Bye-bye.
Right. Good to see you, Larry.
Bye. Okay, guys. Thanks. Perfect.
You're welcome.